Beautiful people, welcome back. Misinformation is the mother of all issues that a lot of people face. When someone looks at you or meets you at first, see something about you, hear something of you, their predominant state of mind of whatever they think they know will be the lens that they would interpret the new information from, regardless of whether it's true or false. Now, if someone has been conditioned based on misinformation, everything else that comes from that, or that is perceived from that lens of misinformation, perpetuates that same initial misinformation, no matter what its derivative, no matter what flavor, no matter what form, and no matter how confident that man or woman is, and no matter how confident those group of people are about what they think they know and what they think they're doing. If you say you want to, quote, discharge any given obligation because the United States is in the status of being a debtor, and that House Joint Resolution 192 only stipulates that the only thing that can be done is simply discharge rather than pay, even though that's not really what the verbiage of House Joint Resolution 192 really tells you. It delineates the difference between payments and discharge. And that term payment is still used till today, validly, just as much as that term discharge is still used validly. And there are different types and forms of payment, just as there are different types as form of discharge. What we're speaking of here is discharge. But in order for you to really comprehend discharge and what you think you're doing, no matter what form of discharge that you're doing, you must comprehend how debt works. You must comprehend how it got to become. Otherwise, the verbiage of the communication, the things that you add, that one-page cover letter that you add with everything that you've read on PDF or heard someone tell you, that one cover letter is what qualifies everything under it. Just as much as whenever you do any court paperwork, your judicial notice and your preponderance of evidence is what qualifies all the things that you've said from the first page to the 10th page, or from the first page to the 3rd page, or from the first page all the way to the 120th page of all those papers and affidavits that you're putting in. Believe it or not, a jewel that has just been told to you, meaning whenever you discharge, always put a cover letter stipulating certain things. And those things that you be speaking about in those cover letter, which is a qualifying factor for whatever type of discharge you're doing, is what we'll be going through here. You've all heard of 31 U.S.C. 3113, the fact that they enforce it at their will. There's a reason why they do that. There are other federal acquisition regulations that goes along with that 31 U.S.C. 3113 that many people don't know about. But regardless of whether you know about one part of a verbiage regarding discharge or not, here's something that you must know, because if you know this, everything else you're going to be doing will come in as a second nature rather than your mere regurgitation. Two specific terminologies when it comes to debt and discharge, or payment, whether it be public or private. There's something called a national debt, and there's something called a federal deficit. A federal deficit and a national debt are two completely different things. In summary, if you get nothing out of this whole thing, a national debt is what is owned to the nationals themselves, who are the holders of the actual security that's being traded back and forth, whether in the national market called the stock markets or the international market called the foreign exchange market, regardless of whether it's dealing with a contract or the type of assets like gold, meat, whatever it is, literally meat, knives, those are traded on stock markets internationally and nationally also. And those directly ties into the debt and the deficit. But national debt is the debt owed to the nationals, aka the landlord of whatever geographical bound any given entity is doing business at. Now, federal deficit, on the other end, is merely the reflection of the bookkeeping and accounting of any given entity. For those who might have went to school for accounting or know a little bit about accounting, you would know that if you listen to all these people speaking about discharge and you listen to what they're saying, you will know they don't know what they're talking about. There are different types of accounting. Discharge is a very small part of accounting. There's bookkeeping, there's financial accounting, there's managerial accounting, there's income tax accounting, there's balance sheet, there's income statement overview, there's financial reporting. Federal deficit is part of that financial reporting summary. There's break even, there's budget. They tell you these things in all the news, NASDAQ, all that. They use these terminology. These aren't just some cute words. Sounds cool. They have meaning to them. And those meaning is the dynamics of how it works. Those dynamics is how you make it work. If you don't understand it and you say you want to discharge, which tax deduction and credits, tax credit and tax deduction are a form of discharge. You're just looking for some quick way out, and you're really just screwing around. But the two main things we're going to go over here is what a national debt is and what federal deficit is. Because whenever you're discharging something and you put that cover letter there, you must specify what that discharge is relating to. Because now when you're discharging, what you're doing is there's a bookkeeping on your end, and you're merging it with another bookkeeping that is larger on a huge scale. And they have to categorize it one way or the other. And based on how they categorize it determines whether what you're putting in and what you're doing is on your end determined as being accepted or denied, which removes any supposed obligation from your hands, which washes your hands and feet clean. The national debt of the United States is the total national debt owed by the federal government. This was what was spoken of in Article 6 of the United States Constitution, which merges with Article 4, Section 1, which talks about full faith. Article 6 of the United States Constitution tells you all debts contracted and engagements entered into before the adoption of this Constitution, and then before this document that organizes a body politic. Everything else that the parties involved in this document, whatever they owe, shall be valid against the United States, which is the name of the body politic, under this Constitution as under the Confederation. Meaning, despite a new document being created as a form of reorganization, as a form of bankruptcy. See, a lot of people, when they tell you about bankruptcy, they talk about 1933, 1861, 1871, the Act of Washington, D.C. The bankruptcy of the United States goes way before then, even before the Articles of Confederation were created. This Article 6 lets you know that they are already in the debtor status. And even then, there are different types of bankruptcies. There are certain types of bankruptcy whereby when you enforce it, it subrogates, it flips the position and makes you the debtor into a creditor. These are the subtleties and factors and the dynamics of how things work. But all these people that go on about the United States being debtor, they're fraud, this and that, you can't do this, they can't do this, they don't put these into consideration. Misinformation is a mother of all issues that exist in today's world. And once misinformation is repeated so often and people pick up that misinformation, it slowly becomes the norm. All debts contracted and engagement entered into before the adoption of this Constitution shall be as valid against the United States under this Constitution as under the Confederation. That phrase and that clause directly ties to the Article 4, Section 1, full faith and credit, which says full faith and credit shall be given in each state to the public acts, record, and judicial proceeding of every other state. If you know how to use those two clauses and you comprehend the difference between national debt and national deficit, you'll be able to discharge anything. Granted, you still have to apply yourself. The national debt that it's speaking of here is there in Article 6. It speaks of debts in its first clause. As to the fact that, look, you, the United States, and your representatives, and all the other previous entities that attaches to you, that you're reorganizing from, and all these other body of instruments that created you in the past that is still valid till today, you are all debtors, and don't forget that. That is what Article 6 is speaking of. It's just a reminder that, look, just because you're reorganizing your stuff, you're not going to subrogate us. Now, who is this us, and why would they create this clause? That's the question you ought to be asking yourself. And within the process of you asking yourself that question, it tells you, you'll be able to figure out what the national debt really is. The national debt of the United States, mentioned in Article 6, it's a total national debt owed by the federal government being the United States, its agencies, enclaves, subsidiaries, etc., etc., of the United States to the Treasury security holder. So the debt itself is not owed to the Treasury. The debt itself is owed to the holder of security. Who holds the security? It's the question you ought to ask. Security holders. Who are the security holders? Who are the sharecroppers to the Treasury? The landlords, the nationals. That is what the national debt is. It then goes on to give you another delineation. The national debt at any point in time, is the face value of the then outstanding Treasury securities that have been issued by the Treasury and other federal agencies. The term national deficit, and it puts it in quotes to let you know now we're talking about something else. They've given you the delineation of what national debt is, but in the process of understanding the totality, which is the national debt, you must understand the intricacies of bookkeeping and how we do our financial reporting summary, called national deficit, and national surplus, meaning the income and outgoing. The T ledger, right? The basics of accounting. The term national deficit and national surplus usually refers to the federal government budget balance. Budget, meaning what we've determined that we're going to be able to spend based on how much we have available and how much we can create, how much we can modify, how much we can get, how much we can lose in operational costs. From year to year, not the cumulative amount of debt, aka national debt. These two words, national debt and federal deficit or national deficit, are two very important terminologies that you will put to use in your cover letter when you discharge. Someone can tell you about doing a 1099-C, 1099-A all day, every day. You can even do it right. But do you know why they tell you 31 U.S.C. 3113 is a contingency of what favors them and they do it whenever they want? It is because of this right here. If you know what national debt and national deficit is, it will favor them whenever you attach that cover letter, and they will react and perform against it like that. And therein lies the fine line between those who discharge successfully and those who don't. It then goes to tell you the different types of debt. Some exist publicly, some exist privately, aka intergovernmental debt. If you go into a website called datalab.usa/Americas-finance-guide/deficit/, it tells you what a federal deficit is. In 2001, the federal government spent $2.77 trillion more than it collected. Whatever you spend more than what you collected, becomes a deficit. They tell you resulting in a deficit. Now, whenever you do a write-off, you do know that you always want to be in a deficit. That way your so-called income or earning does not become taxable. And that is one of the ways that you can write things off. That is one of the ways that you can balance the books properly. And in some cases, get some checks back. And these people, the way they operate business, they're showing you and telling you. So you must structure your discharge in a manner that aligns with the deficit itself. See, on one hand, someone might read this and say, in 2001, the federal government spent 2.77 trillion more than it collected, resulting in a deficit, and go, oh, they're debtors. Look at that. They don't know how to manage money. Sure they do. Sure they do. If you know how accounting works, this is perfect right here. Usually you would think of it from a position of a parent talking to a child. Why you spend all this money? Yeah, I'm gonna punish you. You're gonna be grounded. You don't know how to save money. But in accounting, when you have a deficit, that's a good thing. This is exactly what Robert Kiyosaki speaks of when he talks about debt is money. See, when these people speak, you have to listen to them. When they put things in fine print, you have to look at it beyond the words itself and actually apply it to exactly what is going on. There's a message behind words. Just don't read it and combine words to pronounce what it means. The federal government spent. Just don't combine those words together into a sentence and then interpret it as how you feel about it. Don't do that. These words combine to mean something for a very specific purpose. When they say this is a debt system, they know what they're doing when they say that. And there's a meaning to that. When all these wealthy people tell you that you have to use debt to get wealthy, they know what they're doing. Deficit creates money. And when that money is created, you must lose it. But it's where you're losing it that matters. If it's loss in business expense, good. Do you see what they're doing? Do you see the gain? But you're not necessarily losing it the way you think. You are now buying things with it and holding it, and then get a residual income with that thing that you're buying and holding. It doesn't necessarily have to be real estate. It can be, but it doesn't necessarily have to be. It can be a John Deere tractor and you rent it out. It can be a Lamborghini and you rent it out. That money is not yours. You spent it based on your business expense. You lost it. You are in deficit. Now you owe no one else because your pocket is in the negative and you have nothing to give anyone. And then you put your eggs in different baskets. These people are not stupid. A lot of people speak of the United States being bankrupt. They're bankrupt, as though that's supposed to be something good that gives them ability to do something. No, it doesn't. They know what they're doing when they go bankrupt. If you really want to learn the art of tax avoidance, pay close attention to how United States does business. They put it to use all day, every day. Because that thing spoken of in Article 6 of the United States Constitution, the national debt, is all based in previous taxation of some type of commercial activity that they owe. And they have been effectively avoiding it generation after generation after generation. They've been discharging it by postponing it. Hence the debt obligation system. You're trying to mimic that. Is that not what you're trying to do when you so-called want to discharge something? Well, you have to understand how it works for you to be able to successfully do it. Beyond what someone else has told you. Beyond what some PDFs that you've read says. That's undisputable. In accounting, when you do not have a deficit, it can be a bad thing. Especially if you're presumed to be a debtor. That means you do have the money to pay up. Now put it into the national debt because you've never had a deficit. You had a surplus. Good. Now take that surplus from your accountant and put it into that pot of national debt that you owed us in the first place, and that's affirmed within the document that created your entity called the United States. But wait, if you're always reporting everything that you got as a deficit on accounting pen and paper, and you hire your own internal auditing and accounting company, who can audit you if you hire your own auditing company to balance your own books for you on behalf of the IMF, the Federal Reserve? In order for a true audit to be done, there has to be a neutral third party that comes in and do it. But if that neutral third party is not coming in and auditing it, and the one who's auditing your books is the same people that you hire for your benefit, then who can hold you liable? But you still owe the national debts though. Well, you can finagle it through your own deficit and surplus bookkeeping. You must understand these foundational principles before you go on about discharging. Does discharge work? Yes. Are there different types? Yes. But if you don't know these basics, the influence and the intent behind why you're discharging, and what that 31 USC 3113, when it's done in the interest of the government, what it really means, you would not know it. It would just sound good. You would regurgitate it because you heard it from someone. That means you don't have any money to satisfy any debt. And thus the only thing you can do is just postpone it perpetually until the creditor gives up and subrogate themselves voluntarily. Remember, in the past, we went over how taxes that people pay are considered a waste based on a grace commission. We've went over that video. And that even if they collected 4 point something billion of it, it would only last them for 7 days. And that was back in the mid 1900s. Considering inflation and deflation, the fact that that amount now is probably equivalent to this amount, all this is an amount that they have wasted, and thus they are always in a state of deficit. So they don't have any money to pay their creditor, as they're mandated in Article 6, Clause 1 of the Constitution, which ties directly to the Confederation, which ties directly to their interaction as to why and how they're doing commerce here. But see, even this Article 6, Clause 1 only tell you that the debt is still binding. It really doesn't tell the stipulation and the terms and conditions of how it's going to be paid, how it's going to be reimbursed, and how the books are going to be balanced. Other documents, other bodies of treaties stipulate those terms and conditions. This one, called the Constitution, only lets you know that, look, you're still binding against those debts, but it does not tell you how it's going to be paid. If you really want to know how these things work, you need to start looking into treaties. You want to enforce discharge with ease like bread and butter, you better start looking into treaties. And no, not the Treaty of Peace and Friendship. If you do not comprehend these basics of the relationship, these trust relationships, how accounting works, you would just be speculating left and right as to what discharge is. You will read all the bodies of codes involved, you will hear what people say, but it really still wouldn't actually click. And guess what? If it doesn't click, you cannot amend your reality to actually favor you. Just put those tidbits into consideration. And know that this term national debt, and national deficit, and national surplus are what you will be using in your cover letter in any type of discharge. For instance, even if you're doing accord and satisfaction, accord and satisfaction is just basically condition subsequent. That's the reason why whenever you look at their terms and conditions, they would always tell you to send it to a specific address. Like a credit card, they would tell you if you want to do an accord and satisfaction, send it to a specific address. And that naturally aligns with the principles in 3-311, which is accord and satisfaction, which tells you one of the things you have to do is send it to the proper address in order for it to be enforceable. Meaning now they still have to accept it. And if they say, well, we don't want to accept it because we don't feel like it, how do you compel them to do so? Understand how national debt and how national deficit functions. Take care and best of luck. Hey, I'm inviting you to come and join my Patreon if you haven't. Over there, we speak about things we don't talk about on YouTube. We speak about privacy, we speak about trademarks, the USPS, and how they use trademark products to basically subrogate you. We speak about things of spiritual nature. We speak about UCC related matters. We speak of how to sue people, audits. We speak of property rights, copyrights. We speak about child support, loans, commerce. We speak about the intricacies of the different types of corporation and how they use it against you. We go over the laws and the verbiage of copyrights. We go over how to create copyrights and trademarks, how to sue people, the intricacies of actual fraud, corporate veil, how it's used against you, how your trust cannot be pierced, the private side of court beyond the commerce. We speak of how to protect your asset and how to enforce it against people. We speak about discharge, different types of discharge according to satisfaction, how to go after their oath of bond, how to get their oath of bond, especially on a federal level. We speak of how to create private profiles. We speak of many things regarding privacy and the Fourth Amendment, how to sue them, the different types of suits and relief, how to establish probable cause. We speak about copyleft and how it's in fact full faith and credit. We speak about the common laws, public act, session laws. We speak of GSA bonds, how to fill them out, how to put your vehicle in trust, how to not qualify for taxation, and many good study tools, and many more to come in the future.